Whenever you talk about your biggest win, you need to take that out and throw it away. Your biggest losing trade, take that out also. What are you left with? Because that's your real stats. That's your real meat on the bone in the middle. That's what matters most. Your best trade is always going to be the one that you over leveraged and you were swinging for the fences and it was a gamble. So you can't even attribute that as your skill. That was a lottery win. And the losing maximum loss day is the same thing you held for that same expectation, but it went against you. You weren't trading with your model. Your biggest maximum loss, that's not you trading responsibly. So in both extremes, you need to take those away. And I learned that from Larry Williams. So when you're looking at systems and numbers, take your best number out. But he didn't say take the worst one out. He always said take the best one out. I say both, because that's illustrating a lack of you not following the model. And what's left is the clearest depiction of you when you are engaging your model within the realm of your ability to stick within it. That's the results in the data you have to show it. If that means that your average profitability on per trade is less than $1,000, then that's what it is. That's not shameful. Remove all emotion, remove all psychological influence over what you're trying to make or what you're afraid of losing, and only focus on what price should be doing based on your model and submit to that. And that is how you hold on to winning trades and not getting, I should have did this, I should have that, because you don't know what you're doing. You don't know your model and you're too emotional. You care too much about the open profits becoming less. I was up $3,000 on that trade, and it came back, and I just couldn't hold it anymore. I got to get out at $1,800, and then it went $9,000. If I just would have held on to it, how do you fix that? I just talked about it. Everything that you do should be driven with the mindset that you are focused primarily on keeping your trading excellent. Your efficiency, your execution and entry, your stop placement, your trade management, you're not over leveraging, you're not trying to do the maximum outcome, and you're worried about capital preservation. Number one, first and foremost, is you're not trying to risk money needlessly for the sake of being in there and seeing what happens. Because I'm going to save you some money and time and heartache. Here's what's going to happen. You're going to lose your ass. And that one trade is going to cause you to go into a tailspin and you're going to blow your account, trying to rush to get it back. It happens all the time. Just don't do it. Period. And finally, lead dog pitfall. Everybody wants to be the lead dog. Everybody over here on Twitter right now is clamoring to be the person everyone wants to talk about. It's silly, isn't it? And I'm not even over there anymore, and they're still bringing my name up. Here's the problem with this, okay? If you don't have the real skill to be lead dog, you're going to be the one that tries to pretend to be lead dog. But guess what? Lead dog is the first one that falls into this. I have a genuine interest in all of you succeeding. I'm not going to pull any punches. I'm not going to sugarcoat it. Because if you were my son or daughter, you would hear it just like this. You would hear it just like this. I want you to know what it's going to be like. It's going to be hard. It's going to be taxing. It's going to be an arduous task. It's going to be very, very difficult to go through in the beginning. But it's worth it. Because once you get this skill set, all you got to do is wait around in the morning, in the late evening at the watering hole. That's the kill zones. See? The master of analogies. I'm never going to run short of it. This baker never runs out of yeast. But all of these pitfalls, they're going to plague you and your development in the beginning.
You do not want high excitement in your trading. Only do that on the weekends when you had a really good smashing week, when you just killed it. That's when emotions are allowed. But throughout the week, when their markets are still trading, you cannot allow your emotions to get ahead of yourself. You can't get crazy. And you want your trading to be boring. You want it to be monotonous. You want it to be mundane and routine and nothing exciting about it. That's when you know that you're not going to be forced by emotion. You're not going to be drawn in by fear and greed. It's just business as usual. It's the same thing all the time. And you hear it sometimes when I'm talking. I'll talk about a specific level. The market starts screaming for it. I'm still talking. I'm not worrying about it because I've seen it so many times. And the whole time the room is lit up. They're like, I can't believe this is happening. Look how it's moving. Look, it went right to the pip. You're all experiencing that for the first time.
Because you're holding yourself to accountability. And that's a very, very hard line to walk as a human being, let alone placing it on the measurement of making money or losing and equating that to failure or successfulness. And you can't do that in trading, because you can be successful and still just taking very small losses.